You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
What's going on, everybody? Welcome to the Option Block. Everything working right off the bat there. That's always fun. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Welcome to the Option Block, your bi-weekly source for all things options related. You know how to get us. If you want to join us live Monday and Thursday at noon Central, 1 p.m. Eastern, so pretty much right about now, hit that Mixlr button, listen, sit back, kick back, relax, enjoy. Maybe lean forward, dive into your trading screens, whatever you prefer. We don't judge. And, of course, hit us up, questions, comments, insights. Play along with our polls over there at Options. They're pretty fun. Gives us some interesting insight into what you guys are up to as well. And you guys always have interesting curveballs you like to throw into those polls as well. So have at it over there at Options. And we'd love to hear from you. And joining me on the old program today, let's see. Who do we got on the old show today? Let's spin the wheel. Let's go all the way out to a town that he says changed America. I'm still on the fence. We shall see. We got the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Riverside, Illinois. Scenic and sunny Riverside, a.k.a. snow-drenched. Mr. Meatball, how are things, sir, in the town that I think literally revolutionized all human life as we know it?
Yes. Well, Riverside was allegedly the first planned community in the United States. So, is famously designed by Mr. Olmsted of Central Park fame.
Yes.
Which is why so he was hired to design the town, and then of course the town completely flopped and failed. The Riverside company that founded Riverside went bankrupt, and then
as you would expect,
years later, Riverside became a suburb of the great city of Chicago.
Planned community has all sorts of
Illinois.
Has all sorts of ominous, undertones to it. You get like a Stepford Wives kind of feel. Oh, it's a planned community. We'll have 3 of those, 2 of those, all sorts of ominous undertones there. But we'll leave that up to your imagination as we go a little bit farther afield, even to another town. Maybe it's a planned community. Maybe it's all a giant, crazy, Skippy Euros cult. I'll leave it up to you to decide. Of course, it is St. Charles, Illinois, where we are joined, if the weather gods are smiling, by Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, are you there, sir? Are the weather gods indeed smiling upon you?
I am here, and everybody's smiling in St. Charles. What's not to smile about? You get to live in St. Charles. Our town is known for a lot of things, but a fun fact about St. Charles is that we were an integral part of the Underground Railroad.
Is that
Civil
right?
War times. Yes.
There you go.
It was also named in honor of a French king and saint. I don't know if you knew that.
If they made it all the way up here to St. Charles, was it really underground anymore? They were kind of out of most of the harm's way, you'd think. So now it's kind of just a railroad. But hey, we can call it underground if you like. It sounds cooler that way, doesn't it, I think? All right, with the team assembled, before Uncle Mike gets mad at me, I'm going to mute him as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You guys know the drill, the portion of the show where we break down what the heck is trading out there. What is going on? What is lighting up our collective tapes here on the old options market and indeed on the old broad market as well. And it's kind of been an interesting narrative we've seen unfolding over the course of this week, because last week, of course, the Bears were in full command. They were leading the dance over there. Coming into this week, maybe not so much. You know, we had earlier, beginning of this week, first off, everyone was terrified. Oh my God, Apple can't sell phones. Sell it all. Sell. This week coming in, maybe not so scary. Maybe Trump and the Chinese, maybe they're going to play nice. Maybe earnings not as terrible as some had feared. Maybe Apple will exist going forward. And, of course, Trump scaring the heck out of the Fed, so the Fed being a little bit more dovish. And now, all of a sudden, the market has one of the biggest up days in its history yesterday as a result. All it takes is, a branch of the government arguing with not quite a branch of the government, but a very powerful entity. And then perhaps that's what it takes to get a nice little, or should I say not really little, massive up day in the markets. Today, given some of that back, not quite a surprise. Most of the major indices off, but ever so slightly. S&P off, not even 0.2%, about 0.17 or so. The Dow off a little more, but almost 0.25%, and NASDAQ right around similar territory. Percentage-wise, all over there. So a lot of interesting stuff on the horizons. Let's see if cooler heads have prevailed. Let's go back to the town that didn't quite change America, but was pivotal, I hear, in the Underground Railroad, a.k.a. St. Charles, Illinois. Uncle Mike, sir, what's catching your eye in today's activity?
Well, aside from the excitement that's around town that Bret Michaels is coming to town on December 22nd.
Whoa!
Okay, that's big time. When you getting me and the meatballs some tickets, sir?
Hey, you guys have been offered to get personal boat rides to the Arcada Theater from my home, and you guys have both turned it down. So no.
What are you talking about? I have done nothing of the such, and would gladly take a boat ride to the theater from your house. We should all do that. I tell you what, everybody that listens to the show is invited to Mike's house. I will join you. All right, Mark's going to come too, and we're all going to go to see Bret Michaels.
Free
He's going to provide all the beer.
His boat, his river yacht can accommodate what, 300, Uncle Mike? So we'll be good.
At least.
Free euros for everybody, and then we'll all see some. I want to know, before we can get to what's trading, how the heck did St. Charles become the mecca for 80s hair metal nostalgia?
It's the Arcada Theater. It's a great spot. We got everything there. I saw Charlie Daniels do The Devil Went Down to Georgia live in my hometown. I parked, and I was already back in my home within 10 minutes of parking. I cannot do that if I go to a Chicago event.
You cannot, sir. That is true.
You cannot. Although if you lived by Mark Longo, you could.
You could walk.
Yeah, good point.
Then you could walk to the United Center, which is fun.
That's true.
Oh, yeah. Well, that's a nice, safe walk over there.
The joyous Sunday afternoon stroll.
Yeah. Hey, kids, let's go walk to the United Center.
Put on your body armor, and then let's go.
For sure.
I digress. Have at it, sir.
All right. So anyway, aside from the excitement of Bret Michaels coming to town here in a couple of weeks, I think a lot of what Mark said in the intro is adding up to this market increase, at least yesterday as well. But the main thing that it seemed that really sparked the market is when Powell was doing his speech, and he said that we were near neutral, and then all of a sudden that's really what kicked off the rally yesterday. I'm not sure that who knows what actually happens behind the scenes, whether Powell got an angry phone call from President Trump or whatever happens. But as soon as he had mentioned that instead of saying how the expectation of having one more rate hike this year and then 3 more potentially next year with rising interest rates, it seems to be that when he said that we are near neutral, that was definitely a spark. Now, what does that mean for what we're going to do with interest rates? Who knows? But just once again, I think this kind of shows the laughability of how the Fed, when they claim to not be a political or be influenced by markets or politics, I think yesterday's statement just shows how laughable that claim actually is.
I mean, I think you could make an argument that they actually kind of needed to slow down. If you look at the price of oil, at housing prices, at, basically basic materials outside of quote unquote transitory things, basically tariffs on Chinese goods, where is their inflation? And the old Laffer curve doesn't really make sense when you still have a U6 unemployment that is way high historically. So,
but those things didn't exist at the last rate hike. They were saying how we had we had those things, and we didn't magically get all those changes with the 2 months.
No, I think that they were being stubborn at the last rate hike. Although, in the last 3 months, you could argue that, some of the conditions, especially housing, has become much more apparent that there is a slowdown than there was 3 months ago. So I'm interested. I think that, one, maybe the market was a little ahead of the Fed, and they're doing a little clarifying. And I think more importantly, maybe the Fed was a little ahead of the Fed, and they realized, hey, we need to slow our roll. Either way, I'm all for what they had to say. I think it was the right move to say, hey, instead of forcing rates higher, how about we wait and see?
No, I agree. I think it was definitely the right move to say that. However, I do believe that there was an angry phone call from a certain president who has a Twitter account.
I refuse to believe he's able to do such things. If you think he would call someone and make an angry rant, I think you're mad, sir.
Who are you talking about? Who is this calm, delightful president that sounds nothing like the president I know?
Very restrained, not prone to hyperbole in any way, shape, or form.
None whatsoever. No. None at all.
Even keel Trump, what they call him, right?
Yeah, that's what they call him.
Of course. But with that,
my name for him.
Whatever the case may be, that's the big thing that's moving the markets, in my opinion. If we do get some type of a trade deal, what's going to happen in the financial media, the Republican newspapers are going to say success, mission accomplished. The Democratic newspapers are going to say Trump gave in to China. You're never going to know what the actual news is, but the bottom line is that the markets are rising right now.
Yeah.
And we are seeing good things for those of us bulls out there.
Can we talk about the silliness from today? All right. The price action today is quite possibly the single dumbest price action I've ever seen in my life. We literally sold off $6 because Peter Navarro was going to dinner. We have hit a new low when people are concerned about who's attending presidential dinners rather than and so headline reading, algo reading. It just, the price action today is some of the dumbest price action I've ever seen in my life. And it made me angry. The most made up stories. Peter Navarro's going to dinner. Sell, Mortimer, sell. It's so dumb.
But you're not an algo reading Twitter for all of your trading decisions, sir. So what do you know in retrospect?
You need to read Twitter more.
Yeah. Oh, yeah. Well, nothing is more stable and will make you feel better about yourself than Twitter. I did some work for Kramer this week, and it's amazing how many brilliant people get to tell me what a complete moron I am for having some sort of market outlook on that's related to VIX and volatility. How dare I have an opinion?
The defense forces get out there. TVIX has a surprisingly strong one. The gold bugs will brook no dissent. And the crypto folks, even though they're a little bit diminished now, but the crypto hardcores are still out there as well. So if you slam any of those,
they aren't messing around.
If you slam any of those, they will come back to bite it. Outside of your Kramer-related vitriol, sir, and your concern over dinner party guests. So what else is catching your eye in this market, sir?
I mean, come on, guys. That's just it. It was one of the dumber things. It was, I'm watching Apple, which had a heck of a day yesterday. I'm watching tech stocks in general. What else am I watching? Oil continue to kind of move. Actually, interest rates. You notice that one sign that maybe we've calmed down a little bit here. Interest rates have really slowed their roll. So that is the other piece. So watch those interest rates. When interest rates are here, there's actually tends to be a correlation between markets and bonds rather than the standard non-correlating markets that people look for.
Yeah, you mentioned our old friend Apple. Apple is lighting up the old tape today. In fact, let's see exactly live right now what is lighting up our collective tape out here in options land with our most active, the top 10. These are equity options now. You SPY, VIX, those are kind of different beasts over here. Let's talk equities and equity options. And of course, you probably guessed Apple. You're right now. Is dominating the tape right now. Over 500,000 contracts on the tape as of right now, 562,000 to be precise. Calls leading the dance by about almost two-thirds. Two-thirds to about a third calls versus puts out there. Twitter, number 2, a distant number 2, not quite, not even 250,000 on the tape for them. They're looking at 80% calls out there. So Twitter having an interesting day. Let's pull up the latest Twitter. Twitter off 1.5 handles, yet calls leading the dance out there. Kind of interesting. Off 4.5% down to 31 and change. And yet Twitter number 2 here on our options most active, which is kind of interesting. Facebook number 3, as you might expect, a little over 200,000 on the tape there. About roughly 2/3 to 1/3 calls over puts. AMD number 4, about 141,000. BABA number 5, 140,000. Netflix, good old Widowmaker number 6, 128,000. Amazon coming in number 7, 123,000. Softy number 8, 117,000. Number 9, Bank of America, 111,000. Number 10, GE. Another one coming under some pressure of late, 97,000 contracts out there. It's not a rock'em sock'em robots day out there, but a decent day. GE actually catching the most modest of bids right now, up a penny and a half to 7 3/4 up there. Oh, what a road GM has had just over the past few weeks or so. It was trading 11 and change not too long ago, and now shy of $8, 7 3/4 out there. So a rough road out there. And of course, all this back and forth means VIX cash getting a little bit of a lift today, up about 3/4 of a handle, right around 19 1/4 again out there. And there are some earnings you mentioned on the tape here this week today. Before the bell, we had TD Ameritrade, Abercrombie and Fitch for all you out there in the clothing retail side of the space. After the bell today, we got VMware, got GameStop, HP, a bunch of interesting names going off. Chico's, all sorts of clothing retailers, a lot of them popping off here. Burlington, Chico's, Guess, Express, Abercrombie. So, Mark, I know you're a big fan of those, so you're going to be glued to your earnings screen tonight.
Chico's.
So you're a big Chico's fan.
That's my number 1 store. It's where I'm always shopping. You
Chico's. Love to have ladies' clothing just draped around you at all times. Hey, we don't judge here on the show.
It's my favorite. Nothing's better than Chico's.
And you know what your guys' favorite out there is, because you tell us all the time, favorite to love or favorite to hate. Either way, it's your favorite. It's the old T word. So let's get to it with kicking off the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old Odd Block, the portion of the show where we get weird, we get wild, we get funky. We like to kick things off with the funkiest of funky names, aka the name that produces naught but hyperbole these days and the occasional electric car. That is Tesla, off another 5.25 handles, a little over 1.5%, right around 342.60 or so right now. We like to break things down out there in Tesla downside land. This Tesla downside scan brought to you by our friends over there at Trade Alert. Why not? Because they created so many great fun tools for us to play around with on the Tesla side. I think Henry loves the Tesla downside stuff even more than we do here. So we're going to play along with some of those today. You guys can play along too over there at tradealert.com. If you are indeed subscribed over there, hit that cool, funky Tesla downside button that he built just for us. But maybe if you ask, he'll do it for you guys too. And you'll see all these things lighting it up today, including the big trade out there. Someone blasting away at the June 90 puts. So it's not just our Jan puts. It's all kinds of crazy puts lighting it up. Jam par puts, people buying up almost 1,000 for 30 cents out there today as well. But June 90 seems to be the big boy out there. Let me see if I can drill into that one a little bit. Yeah, it's not showing me that, but looks like people are blasting away on the June 90 put strike out here, which is a hot one. Our old D's 50 is also lighting it up, 500 of those hitting the tape at a clip. So our old friends, the Jan 50 and the Jan's not really lighting it up today, which is interesting. Jan par put's getting a little bit of love, not the Jan, and the Jan 10's doing 400. So a lot of puts are trading, just not our usual. Jan quarters, 250 hitting the tape, just not our usual suspects out here leading the dance in Tesla land. Instead, we're going to roll on to our friends that are indeed leading the dance. This is kind of fun, a little bit of a new wrinkle here on the show where we pull up some live activity as our scanners are kicking it to us as we speak here on the show, and let's see what the heck's going up. And our first one that our eye of Sauron has landed upon today is out there in Vodafone Group PLC. Ticker symbol VOD, V-O-D, trading right now $21.30, off about 40 cents or nearly 2% on the day. Of course, this is a British multinational telecom conglomerate for all of those of you out there who are not familiar. So it's trading right around a little bit north of $20, and it seems like someone's deciding to put the old, as a rock lobster would say, the old line of the sand in today on the 20 strike. In particular, the D's 20 puts lighting it up on the bid over 12,000 times for 16 cents. Paper crushing away on those. Looks like on Gemini over there, or is that SIBO? Either way, one of those two. Is where they put that bad boy up. And if you don't follow Vodafone, and I have to admit it's not one of my names I follow on a daily basis, let's go out a little bit and see what the heck's been up in Vodafone. And a year ago, it was trading over $30, almost 31. It got as high over the past year as up to almost 33, 32.75. That was back in kind of the early Jan time frame. Then we know what happened into early February. Everything kind of took a bit of a break. But it was still kind of persisted in that high 20s range, and ever since about May or so, it's kind of been on the slow decline from about 29 all the way down to where it is right now. Actually got it even a little bit lower. It hit 18.5 about a month and change ago. So it's bounced off its lows, at least in the near term right now, but it's still kind of hovering right around those 52-week lows, which makes this all the more interesting, Mr. Meatball here, that someone is deciding, apparently, maybe you differ in your opinion, but someone is deciding apparently to draw a pretty sizable and pretty aggressive line in the sand of the 20 strike, saying, you know what, if it gets down to 20 again, I'm going to buy myself a whole bunch of it. What are your thoughts here on these D's 20 line in the sand puts, sir?
I mean, why not? Why wouldn't you want to own Vodafone at that level? It's my favorite British conglomerate telecom. It should be yours too.
I think the technical term is you want to own all the Vodafone down there at 20.
Yes, every Vodafone
he's buying
I can
all
own.
Outstanding float of Vodafone. Open bid for all of it. Shy of the
as much VOD as I can own, I want.
That's your new strategy going forward, right? In Carmen line, a.k.a. the Vodafone buy all line.
Yeah, oh, you didn't know that? That's all we own is Vodafone.
You really just trade Vodafone volatility. That's
Those
your
were
focus.
all us.
Yes, that was all you. There you go. The Meatball and the Rock Lobster drawing aggressive lines in the sand in Vodafone because they love themselves. A British telecom play. Let's see what else. We know we're talking about clothing retailers. This one I think will interest you, Mr. Meatball. Next up, our Eye of Sauron has landed upon American Eagle Outfitters, ticker symbol AEO. off today about 70 cents or about 3.25%, hovering right around 20.5 out there right now. This is, of course, American Eagle. It's a thing you see in the mall next to Banana Republic and some of the other clothing outfitters out there. They're all kind of the same to me. I know you guys probably can discern between the different brands. To me, not so much. But let's see what's going on out here on the options front. That's where our interest is drawn. And looks like we've got a little bit of a flipping of the script of what we were just talking about. We were talking about looked like some size line in the sand puts in Vodafone. Now it looks like someone perhaps getting a little bit spooked, perhaps, out here in AEO. In particular, the big trade out here were the D22 puts. These are actually in the money puts, which makes them even more intriguing. Looks like paper coming in and not quite lifting the offer, but pretty close. These things were $2 at 230 when the trade went up, so pretty wide. Again, not the most liquid of names, AEO. Someone lifting for 2.25. I think it's pretty reasonable to assume they probably bought those. But again, it could have been tied to stock, so you never know. But I don't see that listed here. Let's see. So 2.25 on the puts. So probably an opening buy. These were definitely, by the way, the Vodafone puts were all opening as well. These are opening as well. Not much OI really to speak of on the old strike. So it does seem like someone has a bit of perhaps some concern to the downside here in AEO. So let's go out and check and see if their concerns are perhaps warranted. Let's look out over the past 52 weeks. See what's been up in AEO. And oh yeah, it can get a little lower. A year ago, it was trading $15.66. In fact, the low was $15.25, right about a year ago. Then this thing has kind of been on a nice little upswing pretty much ever since, getting as high as 29, almost $30 back in late August, early September, around that time frame there. Then ever since that peak right around then, another one hitting its peak right on my birthday. Interesting. Auspicious time for the market, that must be. And then selling right off again here as ever since. So it's kind of been straight up and kind of straight back down here for AEO. So maybe in light of that, you can see why someone might be a little bit concerned about some downside. Usually when we see size puts like this, they tend to be underlying holders. This one's a little bit different, though. Usually size underlying holders are going a little bit farther out, and they're probably going a little bit out of the money to hedge themselves. You don't usually see them buying puts or trading puts this close to expiration. These things are pretty much next cycle and going fairly in the money. These things are almost two handles in the money, $1.50 in the money here. So all sorts of weirdness. Mr. Meatball, if you have any thoughts, do you think this is what it appears to be? You got some other thoughts on what this guy's up to? And also, maybe your thoughts on the utility of, if you are a long equity holder, buying in the money puts with a month to go, or perhaps maybe you have some other thoughts on this one.
Hey, there's nothing like an in the money put with a month to go. It's a unique trade. It's got to be related to stock, or it could be somebody trying to do some sort of weird short position. But I think you're right. I think it's some sort of stock trade.
I mean, yeah, this one definitely gets filed in the weird. This one's going to probably have to be. I'm going to put this in the to be watched file, so we can see what this fellow is up to. I think this needs a little bit more. We have a little bit more time to do a little bit more analysis. I want to see if there was indeed a stock leg going up, and it didn't go up marked as that. So we'll have to do a little bit more digging to see if because it doesn't mean that the stock block didn't go up. These would make more sense tied, I think, just because just to maybe play with that execution print a little bit, and maybe that's also why you went in the money. You have a little bit more wiggle room there. Otherwise, straight up spec with a month to go, that would be strange. But hedging your stock with a month to go, if you believe what it's saying on the surface here, listeners, then perhaps someone has some near-term concern about AEO, perhaps retracing those 15-handle lows. In which case, maybe you want to take a look at that one. See if you agree, disagree. Let us know. Maybe you want to trade around that one. Interesting one nonetheless. As we keep on rolling, this is the fun one about getting the kind of live off the tape ones. Is that we get all sorts of weird names like this one. Rounding out our big three here. This is IQVIA. I hope I'm pronouncing that right. IQVIA. IQVIA Holdings Inc. This is a health information technologies company trading today $125.25, up $1 and change, so not quite 1%, but a decent little pop here for IQVIA. I hope I'm saying that correctly. Interesting name, if they are a health name to have ick in their name is kind of a weird one. But let's see what paper that was lighting it up out here today. What caught our attention? It was about 6,000, so decent paper, certainly for this name. Of the Dees 130s, so out of the money calls here. Again, near term, near out of the money. For 80 cents, these things were offered at 85 cents. They were bid for 65 cents. So another one coming in near the offer there. Looks like probably gobbling up these bad boys. Also opening here on these Dees calls. So yeah, looks like on the surface at least, some opening upside out of the money call love. We've seen that a few times here on the odd block over the years, once or twice. Here, let's see how that looks here in the recent history of, I'm going to call it ICVIA because it just sounds more fun. A year ago, this thing was trading right about $100. So this thing's had a nice 25% move over the past years. And it pretty much, most of that seemed to have started. It pretty much hovered around $100 until about the end of June, beginning of July. And then it kind of shot off. So with these health names, maybe that was some sort of trial they were involved in, maybe something else. I don't know. Says they do some clinical research as well. So whenever I see these times of immediate spikes, that immediately registers to me, okay, biotech. And that seems to be the case here as well. And then they got up right up to the 123, 125 range, and they've kind of been vacillating around that ever since, with a brief blip down to 115 recently, but now back up to 125. So this thing's kind of been on the upswing again after selling off a little bit. And looks like someone maybe believes this near-term pop has some legs, and they want to be a part of it all the way up to 130, and indeed in this case beyond, all the way up to nearly 131 to have these bad boys really kick in and do some loving to the old portfolio. So interesting stuff. Mr. Meatball, we've never seen this on the odd block before. Near-term out-of-the-money calls in a biotech, sir. I am just completely surprised. Who would do such a thing?
Why not? Somebody that's got a real strong opinion, I would suppose. I mean, that would be where that would come from. Someone that thinks that the stock is going to move and they don't want to actually buy the stock.
That would appear to be the case, sir. Someone looking for a little bit of upside here on the old odd block, and we're looking for a little bit of what you guys have cooking. You guys have a lot of thoughts on Apple, so I think we'll get to some of those here with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys take the reins on this Thursday. We like to give you guys a little bit of extra time, a little bit of extra love. By the way, Mr. Meatball, I hope you've got your book polished and ready, because we're getting close to tomorrow's Vol Views, where we had a lot of people picking. So we need to actually go through it.
Glad I could motivate people to make a good guess.
So you may be giving away a book or perhaps more. We shall see. But I have to go correlate all the responses. They were kind of all over the board, as you might imagine. So we need to maybe put together a nice little spreadsheet so we could see. Again, that contest is some people are still trying to hit us up late. Maybe I'll be kind, but this is pretty close now. You're guessing with a day or two left. So I'm going to say no to those. But earlier this week I maybe was charitable. But Meatball and I, we were guessing with 2 weeks out. That's how the hardcores do it. No playing with 3 days to go. Oh, I think Vix will be here 3 days from now. No, sir. It was a week, or actually 2 weeks out for us. So we had the hardcore prognostication. And we were asking him, Mr. Meatball, if you recall, we were even nice. We gave him a range on Twitter as well.
Yeah, I know. We were nice.
At the time, we said, you can play on Twitter, but if you wanted to get entered into the drawing, you had to give us your specific guess, which a lot of you did. But we also gave you broad ranges. We gave you range. Again, this is for where VIX will be tomorrow at the end of Vol View, so 1 p.m. Central, 2 p.m. Eastern. And we gave you ranges 16 to 18.5. Let's see, 18.5 to about 21, 21 to 23.5, and north of 23.5. You guys are kind of all over the place, pretty evenly split, but towards the end, it seems like the saner heads prevailed, with about 36% of you saying 16 to 18.5, which is pretty much where myself and I think the Meatball were as well. 25%, a quarter of you saying 18.5 to about 21, which is actually where we are right about now. So who knows? Perhaps that is where the smart money is. Let's see how we move. 19.25 right now in VIXland. And then 22% saying higher, 21 to 23.5. 17% saying Crazy Town, north of 23.5. So we were kind of split. And again, your specific picks were all over the place, which we welcome those. Those were great. Now we have our staff has some correlation and some adding up work to do, but we'll get it done before the show tomorrow. So, Mr. Meatball, you may be giving away some fun books, or maybe you all screwed the pooch. Remember, we kind of have a very simple bell there. You got to be at least within a handle to be considered for the prize. Don't come to me if you're a handle and a half away, but you were closest, because that's not a winning pick, listeners.
That's not winning.
That's just meager. We look askance at that sort of thing on the Options Insider Radio Network.
Right.
All right, Uncle Mike, we're going to talk some Apple here, so put your Apple pants on. Apple, of course, having another interesting day out there. Let's see how we're looking right now as we're speaking here. Apple off 2.5 handles, about 1.3% to about 178.5. So got a little bit of love. Earlier today, it was north of 182 3/4. Now kind of giving all that up and then some. So I guess from the highest today, off near about $4. So not a great day for Apple, but again, it's seen worse in recent days. It got down as low over the past 5 days. What was it? About 171 and about 171, a little bit shy of that in the last week or so. So yeah, it's been an interesting time for Apple. We know you guys love to sling some Apple, so we thought we'd ask you. Right around the time we posted this earlier this week, Apple had just crossed the 175 level to the downside. And so we asked you guys, hey, right around 175, these are interesting times in Apple land. This sell-off has obviously created some opportunities. What are you guys up to in Apple right now? We gave you 4 choices. First off, would you prefer, these are real prices, at least at the time. Obviously, prices are going to change depending on how the underlying moves. But at the time, these were all pretty much live quotes. We said, the Jan 150 puts, looking out to Jan now. So Jan 150 puts, would you want to sell them or buy them for $1.65? Or a flip side, Jan 200 calls, so kind of equidistant calls and puts here. Jan 200 calls, they were trading right around $1. So we said, would you rather buy them or sell them for $1? So Uncle Mike, we'll start with you. First off, if you have any thoughts, has this sell-off, has it enchanted you at all about Apple? Maybe are you writing some downside puts in Apple again? And then secondly, if you have any thoughts here on our poll, have at it, sir.
With Apple, we do still have it as a longer-term holding in the strategic night. We also have it as a holding in our triple income strategy, to where we do write calls and sell puts on it. So as a long-term holding, definitely still like it. It's a good stock.
I concur.
In terms of what we've been doing in our wheel strategy on it lately, we're just sitting on it for now, because at this stage, what are we going to do? Sell a 180 call and get great premium, have it go up to 187 and then get called away? I mean, we're just kind of sitting on it right now.
What I've been telling people to do on that are income people that like Apple is, instead of selling a call, sell a call spread. So
we looked at that too.
So if it takes off, you get the stock back, but you're collecting this crazy, ridiculous premium in Apple while you can. Because, look at the VIX of Apple, VXAPL. It's sky high.
Oh, no doubt. I mean, I think it's definitely something that we've looked at, but for the time being, we're just sitting on it, because we do feel it's low enough to just to sit on at this point and enjoy the dividend with which we're getting. So with that, what would I rather do personally in terms of the 150 put, buy or sell? Definitely a seller. 200 call, buy or sell, definitely a buyer. That is where I stand on it.
Definitely a buyer.
So you're getting that old risk reversal in there for a nice 65-cent credit, sir. Well done.
I like
it. Full disclosure, I haven't actually put my money where my mouth is on that one, but nonetheless,
I am telling your compliance.
If I had a gun to my head and had to pick, that's what I would pick.
I am telling your compliance, you're advocating that exact strategy with those exact prices for all of our listeners to do post haste. I'm sure they will appreciate that degree of specificity from you, Mr. Meatball. I know you guys probably. Wouldn't it be fun to have VIX Apple as a tradable thing? Then you could sling it in the carbon line, sir.
Oh, that would be really fun. But yeah, it's sky high, and why wouldn't you want to own it here? I think that Apple Premium's been a very fun thing to trade lately. Vols through the roof. We've been doing a lot of kind of butterfly trades in order to get long, and those have been, because not only is Apple expensive, but SKU is super. Is Apple Vol expensive, but SKU's super expensive too. And and their term structure is favorable. So you can set up a pretty decent trade that is, relatively speaking, hedged with some sort of butterfly trade.
Yeah, Uncle Mike's got his bullish risk reversal. You got your butterflies. Yeah, a lot of things you could set up out here. I mean, just looking at this pricing here, those puts were nice and juicy, which could give you a lot of fun things. We're out here, the VIX of Apple as we speak, aka AAPL listeners, a little bit shy of 33, 32.90, up another handle or so today. Looks like it's got as high recently as about 38 out there. Which is kind of interesting. So it's off its recent highs, but still fairly juicy. For whatever reason, this platform will only give me 5 days worth of data on BXAPL. So I'll have to go dig up the others, see how high I got before that. But still, interesting stuff. VXAPL, of course, that is the VIX of Apple listeners. SIBO created single name VIXs a while back, several years ago now, if not longer. And they were planning to list a bunch of products on it. All that kind of went by the wayside. But they still have some uses for it if you use a lot of that Idea Hub stuff that our old buddy, the Viceroy, created over there at Options Express, now Schwab. The premium harvesting things, a lot of those ideas and those cues come from the single name VIXs over there. So there are use cases for it. And of course, at a glance, it's kind of a good little barometer for what's up from a broad volatility perspective in some of these names. Same methodology as VIX, just applied to some of these more liquid underlyings here. So right now, speaking of liquid, you guys are all over this Apple thing here. It's been hot and heavy, but right now it seems like the lion's share of the people, 41%, saying they want to sell that put there, that Jan 150 put for a nice $1.65. I think the Rock Lobster talking about selling himself some puts recently. Maybe that colored the waters a little bit out here. Everybody wants to sell some puts, but I can't argue with people who want to sell that Jan 150 put. If I had to sell it or buy it, I'm probably selling it as well. That risk reversal is kind of interesting, Mr. Uncle Mike, that you were talking about, because I'd be leery to sell the Strangle. In fact, some people have commented, like Pete Yarborough just sent this in as we're talking here. He says he wants to sell the Strangle. I could see why you'd want to do that. I'd be more scared of this leg. I'd be definitely more scared of the upside leg than the downside leg. So if I did sell that Strangle, I'd want to certainly have another leg against it, maybe 210s or something like that, just in case the worst comes to pass here, which in this case is everyone decides it's all overblown in Apple and it retreats, or I should say just returns with a gusto north of 200, which we know in a name like this, when the zealots kick in, that could happen. So I wouldn't be surprised at this point either way. If we retreat down to 150, I guess I'd be more surprised on the 150 move than I would on the 200 move, because we've obviously just been there. But interesting stuff. 41% right now saying selling the put, 25% saying buying the Jan 200 call. So I guess a good chunk of you may be interested in doing that risk reversal. 22% saying you want to buy the put, so not all of you on the bullish train, and 12% saying you want to sell the call. So I guess if you read between the lines there, 2/3 of you want to trade the bullish risk reversible, and about a third of you want to trade the bearish. So interesting stuff out there. You guys are hot now. This has a couple of days left on us. If you haven't played, head on over to @options. Get your voice heard out here in the fun that is going on out here in the Apple Palooza. More Apple questions. Leo T maybe, or Leot? I don't know, one of those two. He wants to know, is Apple a good candidate for stock substitution here? If so, how would you set it up? We were just talking about stock substitution yesterday. It's a popular topic, as you might imagine, given them where the broad equity indices and where valuations are right now. So yeah, well, I guess first question is, are you buying Apple at these levels? If so, then yeah, it's always better to use the options and the stock. Most times, not all times. I'm not a zealot, but most times it is better to use the options. So yeah, I think that's the first question. You don't mention what your outlook is here, Leo or Leo T. So if you're bearish, then no. If you're bullish, then yes. And then beyond it, how he set it up, man, we could do 5 shows on that. Stock substitution. We just hit on the advisor's option. Check it out. Should be hitting the airwaves shortly. If you listen live, you got to hear it yesterday. Otherwise, you'll hear it as a podcast format maybe tomorrow. And we talk about a whole bunch of ways that you could do stock substitution. There are many flavors. There's the basic go out 6 months to a year, buy a 60 to 75 delta call, set it and forget it. There's adding wrinkles of selling covered calls to them. Matt from Orats is talking about selling the covered calls, and then also an out of the money put nearer term as well. So essentially a near term strangle against a covered call. He called it the stock substitution buy right. All sorts of crazy things. Fig leaves, poor man's covered calls, you name it. A lot of different flavors out there. So maybe Uncle Mike, we'll go to you again because this is your Apple's kind of your baby. First off, do you think this? I guess you're not quite on the buy an Apple train here yet. Maybe if it dips to 150, you would be. So maybe you're wishy-washy on that level. But if you were going to proceed on the stock substitution front, what's your go-to methodology for doing that?
Well, I think on this one, what I would do would just be probably without looking too intimately, I would likely want to either do something along the lines of a risk reversal. And by that, if I'm looking to do like a substitution, I would, let's say, buy a call and then for a longer term and then sell put spreads on dips in the short term to kind of finance the premium that I would do to use to buy the call. I may sell some upside calls, but at these levels, I would not do that against the call I owned, of course. But for the most part, I would probably just buy a call and sell put spreads, shorter term put spreads on dips.
Yeah, I like that because I was going to say the same thing. Usually, I'm a big fan of doing the fig leaf, call it what you will, which is you have the long-term call, then write the nearer term stuff against it. This time, not so much. I'd be very scared of that upside coming into pass. And you don't want to clip that. If you're getting into Apple right now, that's what you want, that upside. And there's a very reasonable chance it could reverse aggressively, and you don't want to get caught in that. Even though I moved from 175 or so to 200, catching that wouldn't be the worst thing either. But still, I'm kind of with you. I think the put spread, getting more at a lower level, is definitely how I'd prefer to proceed rather than just doing the old straight up, write the covered call. Oh, I'm sorry, I didn't get. And who knows? You probably would sell it below 200 at this point, by maybe 190 or something. I definitely would not be interested in selling those. Mr. Meatball, are you on board with that, or what's your preferred go-to for the stock substitution range, sir?
My stock substitution range. I think it depends on how volatile the stock is, right? That's really how I determine what I'm doing. And so, yeah, I mean, if the higher the vol of the stock, the wider I set my ranges for that stock substitution, because I want to give the stock plenty of room to run up and down. And I really like using risk reversals and protected risk reversals to create those trades.
So let's say the stock was as volatile as, let's say, an Apple. How would you want to set it up there?
How would I, as an Apple? Okay. So let's say that it was.
I'm leading you back to the water and making you drink, sir.
All right. So, Apple's around 180, but remember that VX APL we just quoted is what, 30, 35? Is that what you said?
I think it was about 32, almost 33.
That is incredibly high for Apple. So that means I'm going to be setting it wider. Now, do I have a line in the sand where I don't want to own Apple anymore? Probably. So what I would do is I would sell I'd take delivery at 170, but I don't want to own it below 150 because that means that something has really fundamentally changed in Apple, and maybe it's time to look at, is Apple the new GE? It's not, but, that would be the question. And then I would take that huge credit, and then, again, I would want to own Apple above, pick a number, let's say 190. And then at 230, I would want to sell it, and I would execute that half of the risk reversal. Maybe I would do the 190, 215 call spread or something like that. And thus, I would have a put spread financing a call spread, and I would have that on for a credit. So anywhere between 170 and 190, I am not taking delivery and keeping the credit, but anywhere above and below, I own the stock. But if it makes extremes, that's where I would kind of unwind. I'm out of it. But, and that's usually the way I'm trying to do those types of trades.
See, that's why I said we can do several shows just on this topic of how you can get your stock or equivalent delta exposure in the underlying, because everyone we talk to would have 8 different ways to do it, which is kind of what makes it fun. Again, check out that episode of the Advisor's Option. Should be hitting soon if you want to hear more about very specific ways to do stock substitution in your portfolio. All right, let's wrap it up here with not Mr. Burns. That's my adding a little Simpsons layer to it. Just Burns. You're not going to call him Mr. Burns because it's more fun. Mr. Burns wants to know is, just straight up question, similar to what we were just talking about. Is buying a call actually the best way to get long stock in this market? Again, I would refer you to our episode from yesterday. But in general, yeah, you're going to get some delta exposure from obviously it depends where the heck you're buying that call, how much stock equivalent exposure you're going to have. Obviously at the money around 50, north of that, a little bit less, south of that, a little bit more. So that's why we're just talking about stock substitution, usually going a little bit farther out, somewhere around 6 months to 2 years in that range, big range. But again, it varies by people. And then obviously where the delta is, most people seem to settle in around, when they're doing this kind of thing, 65, I'd say, to 75 delta in that range. But again, everyone has their own recipe, their own flavor. And so that is a far preferable way from a capital efficiency perspective than just loading up on the underlying. So if you like that kind of stuff, sure. But if you're a diehard stock person, you want to have all the deltas, and you also want to put all the capital aside for it, then yeah, stock. If you're long-term buy and hold and you don't kind of want to just set it and forget it, then there are worse things to have than stock. Mr. Uncle Mike, is buying a call actually the best way to get long stock in this market, says Mr. Burns.
Excellent question, Mr. Burns. I couldn't resist that one. I think that it depends on the stock, of course, but I really, back in the good old days, a few months back, when we had a 910 VIX, I would say, yeah, it is. And I did a lot of strategy blocks on it, quite honestly. But right now, I don't know if necessarily buying a call would be the best way of being into this market. I'd prefer to sell some premium in some way, shape, or form, whether it's through the selling a put spread like we just described, or perhaps selling another call against it. I think right now you're better off doing some type of spread, and I would probably be more partial toward a vertical myself.
I think that goes without saying for us here on the network that we always prefer spreads to outright options trading. So if I gave you that impression, listeners, from my earlier conversation, then I clearly do not hold those views. But yes, he wants to know specifically about a call. Mr. Meatball, should he just go out and just buy a call? Is that the best way to get himself some long stock right now, sir?
It depends. What I will say is a 80 or 100 delta call certainly makes a lot more sense as a long-term, as a buy and hold than does the concept of, owning the stock, going out and buying the stock. I mean, it's a huge waste of capital to buy. It's a huge waste of capital to actually buy stocks. I've never understood the concept, to be honest.
Who would do such madness buying stock? But you're right. You get all the Greeks working for you. Stock, all you do really is get delta. So you're going to go up 1-1. You're going to go down 1-1. On the downside with the options, guess what? You don't go down 1-1, so it's kind of nice. You don't go up 1-1, at least not in the interim, but in the beginning. But it can get there. And you have all the capital efficiency, everything else we've talked about before. So yeah, we definitely prefer that approach. So if that's what you're talking about, buying a longer term call in the money kind of stock substitution thing versus just buying the stock, then the answer is yes. If you're talking about maybe is it just to call the best way to go, then I think what Uncle Mike said with more verticals and more nuanced type strategies are definitely the way we would prefer to see you go. But if it's just straight up stock substitution versus buying the stock, always go for the substitution. It just makes us happy here on the show. All right, let's keep on rolling to our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
By the way, I'm just looking here. Something popped up on my screen here from Market Watch about a looming S&P 500 death cross. I love these names that these death idiot cross technicians give these things. It's a death cross. It means you have to pay attention to it now. It literally says death in the title. That means it's a meaningful indicator. Oh, this stuff. I could go on forever about this. But instead, we'll go on with what's on our radar. As you mentioned, a lot of things to watch, a lot of things going on. Will they, won't they shake hands? Will there be a bro fest, a love fest between Trump and his counterpart over there? Will they slap each other in the face? Who knows? We shall see forthwith. Uncle Mike, sir, what are you watching for the rest of the week into the weekend?
Since Vince McMahon is formerly associated with the WWE, I would love nothing more than to see a pay-per-view of Trump versus his counterpart from China. How cool would that be?
That would get some good dollar. I think Vince would be down for promoting that because that would get some good ratings, I think.
Vince would make that happen. That would be good. Now, in terms of what I'm watching, I want to see if we get some follow through from yesterday. Right now, we're relatively flat in markets, and we have another day. We have the rest of the day today, of course, and tomorrow. But want to see if we get some type of follow through going into the weekend to see if we can. Was indeed a buying opportunity, or was it just a dead cat bounce? Excitement is coming.
Excitement is always coming here on the old network. But before we get to that, Mr. Meatball, sir, what is on your radar?
Yeah, you got this Trump Xi meeting that everybody's paying attention to, which I think is going to be a non-event. But people are paying attention, and we've had 3 up days in a row. We had all the reason in the world to sell off today and didn't. So, call it I'm looking at whether the market is, getting ready to make a serious run higher. Yesterday's run did not get sold. The other thing that's interesting is how hot the VIX is ahead of this G20 meeting. What do they actually think is gonna happen? Either the status quo or we're going to go straight up, but hey, if people want to buy call options on the S&P, which I think is what's happening, then, be my guest.
Here first, the Meatball says, watch this week's meeting. Big things will happen. And also, if you want to buy S&P calls, have at it. So, he also sings Disney too. So, check out all that good stuff over there in the land of the pit. While they're at the land of the pit, Mr. Meatball, what is cooking with you guys, and what can they expect over there?
We have this Wednesday in Chicago at the SIBO. Andrew is flying in, and myself, and we're going to be doing a presentation on using volatility to make some trading decisions and show off some cool new tools that we've got. If you're going to be in the Chicago area on Wednesday and you'd like to come, just shoot me an email, mark@optionpit.com, and I will set up I'll get an invitation to you.
The Rock Lobster is coming to town? He's coming to civilized lands? Oh.
Yeah, we're going to have you out for some meatballs. I didn't know that.
I'll have to come by and see the old one-eyed Rock Lobster and see how he's doing.
There you go.
It's always fun to have a beverage and or a delicious steak with the one-eyed Rock Lobster, man. So check him out over there at the SIBO. If you're going to be around Chicago, you want to see the Rock Lobster in person, it's a rare treat. He doesn't come to Civilization very often, listeners.
No, he doesn't.
And maybe the Meatball as well. Go see him too. Why not? Maybe you win a book. Who knows? Over there at optionpit.com. I'm sure all the registration details are there, sir.
You just got to email. We don't have it posted yet. It'll be on the blog tonight.
Okay, on the blog tonight, or email him, mark@optionpit.com, or andrew@optionpit.com if you want to get on the list. And you do need to be on the list. They're pretty hardcore with the security over there these days. You can't just walk into this one.
They are.
They're super hardcore over there, which is fun. All right, and Mr. Uncle Mike, sir, I know you have stuff going on live, too. People come into your office and whatnot. So what's cooking in the land of St. Charles, a.k.a. the land of the fox?
The land of the fox. Well, we will be having another Option Club meeting in the next couple of weeks. It'll be scheduled shortly. Keep posted to my website for that. If you are interested in finding a financial advisor who is not afraid of volatility, as well as foxes for that matter, feel free to contact me. Visit my website at stcharleswealth.com for more information.
There you go. Hit the man up, stcharleswealth.com. to learn more. And on behalf of the Meatball and Uncle Mike and myself, I want to thank you all for downloading, streaming, subscribing, voting in our polls, sending in questions, listening live, all the fun stuff that you do. If you are listening live, stay tuned. I'm going to get a beverage, rest my voice. I'll be back in about 20-odd minutes, 25 minutes or so, for a little bit of TWIFO. See all this crude action we're seeing out there, crypto, metals, talk, what have you. We're going to be lighting it up on TWIFO in about 25 minutes or so, so stay tuned live if you're doing that. Go get a beverage. Come on back. Otherwise, we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.